You always lose your trades because your strategy sucks. Let me show you how to fix it. So first thing is you need to learn this simple smart money concept strategy, and we're going to use this in line with the support and resistance, and believe me, this is actually going to improve the way you view the market. Now, you are not going to look at fancy things, no multiple time frames as it were. First, you need to understand the logic. So let me teach you the logic. First thing first, you need to know exactly what price is doing per time. So we have price creating this, and all of a sudden we have a change of character. Now, once this change of character has been confirmed, the next important thing that you need to pay attention to is the swing point. So where are the swing points? These are the swing points, and mind you, you need to pay attention to the major swing legs. The reason is because the major swing legs, those are the areas that have major liquidity. Therefore, if for example this is of course this is a retracement, right? Now inside this retracement on the lower time frame, you will see, definitely you are going to see that the price is trending to the upside until price comes here and does what? Push to the downside. So we'll change the color to probably red, right? And where is the price reacting from? Now there are different places the price can react from. Price can react from the normal ICT order block, or price can react from the breaker block, or price can react from a support or resistance level. So you will need to pay attention to what I'm about to share with you, because we'll go to the chart and I will show you a very easy way that this thing actually works. So first thing first, you need to understand market structure. So your understanding of market structure can never be overemphasized, because this will also determine if you are going to make progress or not. So once you have been able to identify this, that okay, for example, you say, or you've been able to check that this is your major structure, you need to check internally what price is doing. Now once you have been able to identify the internal structure, what you need to do is try as much as you can to ignore those internal structures if you can. However, if you don't see any external structure close and you would love to take a trade, probably you have two other confluences aside from that, then that's the only situation you should consider that. Meanwhile, after you've identified structure, understand this, that for example this low here will not be confirmed except there is an inducement. So usually before the market moves, there has to be an inducement. An inducement will be taken. So what exactly is an inducement? An inducement, we have engineered liquidities, right? We have major and minor inducements as well. Now when we talk about major inducement, we're talking about price taking out major swing highs and major swing lows, price taking out weekly highs, weekly lows, monthly highs, monthly lows, etc. Right? So those are the major inducement. A minor inducement are like sessions highs, session lows, and internal structures. All right, I wouldn't want to go all in on this particular video because there is something specific I want to share with you. Meanwhile, in case you've not liked the video, can you do well to smash the like button, and feel free to follow me. I also send free setups on a single and daily basis on my free Telegram channel. Check the video description. In case you want to join my mentorship as well, feel free to check our website. All links is in the video description. Okay, so let's continue. The most important thing here is first structure. You need to understand structure. Then secondly, you need to understand, when I say structure, I mean market structure, right? Both internal and the external structure and the relationship between them, right? Then the next thing that you need to pay attention to is liquidity. What do I mean? For example, if we have price creating higher highs, right? This higher high can never be confirmed except it first of all takes a higher low. For example, this. So if we have something like this, right? Is this a valid structure? No, this is not a valid structure. This is not a valid high. This is not a valid high. So this becomes a valid high only when price comes. So if this price comes, takes this low, the high is shifted from here into this, so this becomes the valid high. Do you understand? And automatically this low is now confirmed. So this is confirmed, so this becomes a strong low and a strong high. So when you are taking your trades here, probably from an order block or from a support and resistance level here, you are a bit confident that price shouldn't close below this if it wants to continue to the upside. And usually if price wants to come take this high, it will go with momentum. Why? Because it has taken liquidity. Now it is going to move with full momentum if the liquidity it takes is actually a major liquidity. Okay, if it's a major liquidity, then the momentum will be higher compared to when it's a minor liquidity. Usually minor liquidities on the higher time frames are major moves on the lower time frame, but that does not mean that you are going to just bank on that unless you are taking your trades on the lower time frame. And if you are taking your trades on lower time frame, each time frame has its own market structure, so you need to pay attention to that as well. All right, so what I mean, this is exactly what I mean. Each time frame has its own personal structure. So assuming that these blue lines we have here is the 4-hour time frame, right, and this red line we have here is the 1-hour time frame. You agree with me that on the 1-hour time frame we have a structure on there, right, which is we have that high, we have this low, and we have higher highs, and we have higher low, higher high. Now these are all forming within a 4-hour higher time frame range retracement. Okay, and this is why when daily is trending, for example, sometimes 4 hours or 1 hour we start trending to the downside, and this is what you do, and this is the best way you can improve your trading. Now you need to wait patiently for price to get into that same level where the daily is. What do I mean? You need to allow price to retrace or trend down into a particular key level, order flow, breaker block, order block, support or resistance, as it were, in line with the original trend. Once you are able to do this, what will happen is this, and you are able to take your entry here. This becomes a liquidity. Therefore, this becomes what? A major liquidity. Why is that? Because this is a structure from the higher time frame. However, this structure internally is a structure on the lower time frame. If you go to the lower time frame, of course it's going to trend, but that does not mean that, oh, you want to just target this low. No, this structure that is inside, for example, this red structure does not have capacity to take out this high. Why? Because this is an internal structure, or rather it is a lower time frame structure. If you are following me, just comment below that I am following. Just let me know if you are understanding below, and I'm going to reply you. All right, so for the sake of time, let's go to the chart and let me show you exactly what I mean and how you can apply this to your trading. So this is the 1 hour time frame, and on the 1 hour time frame, what can we see? Okay, so first thing first, we have this. Now this is exactly what I mean when I said when price is trending to the downside. What's the overall trend? Downside from here, right? You agree with me that everything here is trending to the downside. However, inside this trend, if we go to a lower time frame, much lower time frame than this, you notice that we have a trend to the upside. All right, we'll notice that especially this area, for example. Okay, let me mark this area. You see this area, for example, you'll notice that on the lower time frame, this is a structure on its own, and this structure does not have capacity to take out this particular high. Does not have the capacity to take this high. Why? Because this is either a 5-minute structure, do you understand, or 15-minute structure. So once you have understanding of this, you know how to separate the structures. What will happen is that your analysis will be more accurate. Now, one of the things that will help you is your ability to identify higher time frame inducement legs. What do I mean? I mean, this is exactly what I mean. I already explained here. If we have market going to the downside, for example, we say this is going to the downside, right? To confirm that this is is going to be to confirm that this is going to be a strong high, or rather this is going to be a valid low. In this case, in this scenario, price will have to take out this high. So once this happened, we now know that this high is strong, and automatically this become weak, a confirmed swing level, right? It's a confirmed swing level, but it's weak compared to this one. Why? Because it's on a downtrend. I hope you are following me. I hope I'm not too fast, right? So once you have been able to do that, you need to look for your entry around this zone and start trading until price takes this major liquidity. So what happens if price takes this major liquidity? Now, usually when price is taking that major liquidity, there might be something to the left, probably an order block, a major liquidity level, or major resistance or support level. In this case, price took out this major liquidity. So when that happens, and the trend is currently bearish, right? Overall bearish. So definitely we are going to expect retracement. And how deep can we expect that retracement? It depends on the amount of liquidity that is available in the market, and it depends on the participants in that particular market on that particular time. Do you understand? Okay, so in case you don't understand, just feel free, just let me know in the comment section below. Now let me give you an example of what you can do practically to start improving your trading. First, you need to identify market structure. Where is price going and where is price coming from? First, ask yourself, where is the price coming from? So as you can see, price is coming from the upside on here. All right, as you can see, everything here is forming inside this candle. So literally everything in here is more like an internal structure. So this is a structure on a lower time frame. So if you really want to trade this, you need to pick this structure on the lower time frame. Meanwhile, if you don't want to go lower, which I recommend that you stay more focused on the higher time frames, what you do is simple. First, this is a level, a valid level. Why? Because it took, remember our analogy here, it already took out a liquidity here. Not just that, it took out a major liquidity on here. And when that happened, where did it react from? It reacted from this particular level. Okay, it reacted from this particular, okay, it didn't touch that other block except for, okay, yeah, it reacted from that level. Let's change this. Okay, let's change that. Reacted from that particular level. Also, you also understand that this is coming from what? A particular key level. Okay, that didn't touch, that's not, it didn't come from the A shape, but this time around it came from what? The V shape. That's the V shape here. So that's where it reacted from on there. Okay, so now that you know that, okay, price already took liquidity and reacting from here, you might be a little bit confident that, okay, price will have to come take this low. Why? Because automatically this high becomes a strong high for us. Why? Overall, we are what? Overall, we are bearish, right? And what happens when we are bearish? We wait for liquidity takeout, and as you can see, we have our initial liquidity taken here, right? And this becomes our major liquidity. So once that is taken, you can start looking for your trade, your entry around this level. Also, internally here, you definitely see other structures, other levels that looks like this. So those are the things you need to look for. You need to look for price to form something like this. For example, here you might just get confused, especially seeing that you are on here on the higher time frame. All right, so you want price to take this. Why? Because this is actually the major swing leg. So price takes it, reacted from that zone. So this becomes what? Becomes weak. So let me take this out so you can see it clearly. All right, so this becomes weak, therefore this becomes what? Our inducement. So once that inducement is taken, what else? This becomes what? Is a weak low, which is an area of liquidity. All right, that's inducement. on there, right, becomes our area of liquidity. The same thing, so you repeat the process over and over again. Now you need to add this with logic, you need to add this with market structure, you need to add this with support and resistance, which I teach and I treat personally, and I think that is something that you want to learn. If you really want to learn that, check the video description and join my free Telegram channel or watch other of my content on this channel. Okay, so this is a breakup structure. For example, on here we have a breakup structure here. So what do? We wait for inducement. All right, so this is a single move. So everything happening here, look at this. This is where some of you get confused. Everything happening here is what? Internal structure, except for this. So this traded out, so definitely this becomes inducement. If you are taking this on higher time frame, is something you have to be patient about. Now immediately this happened, what happened? Look at that. Immediately the inducement got taken. What happened? Price came, reacted from this order block. All right, so if you are not trading order block, you can see it's also reacting from where? It's also reacting from this support and resistance level. Now I love this SNR support and resistance because its precision is on another level. All right, so you see our price tap that in. So if you are entering, it has to be from here. All right, and on a norm you ought to target this low. You ought to target this low. All right, of course I'm just showing you a textbook setup. You ought to target this low. Now you might now say, okay, but in this case that did not happen. Yes, it did not happen because you need to understand where market is per time. And you don't have to get to 1 to 20 before you know you are profitable. See, from that level to this nearest swing point, that's about 1 to 8 risk to reward ratio. That's more than enough for you to pass your firm, right? And you see, you don't just get lost within these internal structures, right? Because all of these are lower time frame structures. If we go to lower time frame now, for example, from here, you are going to find out that we'll definitely get entries on there. Right, for example, on lower time frame, this is a structure there. Price come, took out the inducement, mitigated the level, push down, take out this, did the same thing. Look at that, broke this as a break of structure, and what happened next? Takes out the inducement, right? And once inducement is taken, what next? Sorry, that's not what next. Price will come for what? Price will come for this other block. All right, or this what? Resistance level. So you can do this over and over again. Go to your chart, you study this. If this is the only thing you want to master, I believe me, you can make a whole lot of money from this. Now remember, we said when market breaks structure, definitely there's going to be a retracement. Now you can now check, you can check to the left. Is there any structure here? In this scenario, on this time frame, there's no structure here, right? So what do? You wait. Yes, you have to wait patiently. Now, two things might happen. Price might just decide to push up to give another break, which is going to be a change of character, or price will form its own price action. Yeah, just like this. Price from this his own price action, change character here. So you wait patiently for another high to be formed, which is there. Then next thing is inducement, because you want to buy, right? Because these two structures already confirm that okay, price is willing to retrace. How? We have this is more like a sweep and a break. Do you understand? More like a sweep and a break. Okay, so how about this? You might say, okay, how about this? This is what I was explaining to you, that this is internal. All these are just internal structures. These are not the most important thing. Once you are able to identify your externals, you will be safer that way. Okay, so immediately that happened, that's a high, and of course this was a low. So on this particular broker, this low was not taken. Probably if we go check another broker, it will be taken. However, look at that, before it pushed up, look at this level, price took it out. And where is it reacting from? It's reacting from a particular key level. Usually it will react from a particular key level, but on this day you can see there's no key level here, of course, except for lower time frames. Yes, there's definitely lower time frame key level here that price is reacting from on here. Okay, so basically the same thing. We have a break. What do? You wait patiently for what? This is our inducement. Everything here is internal. Okay, see this internal, this is an internal liquidity inducement taking. Where is price reacting from? Your support level. Your support level, that's where price is reacting from, like this. So you see that if you understand this, you can catch good moves. First, you understand and know where you are in the market. So immediately this major inducement is taken. Where is price reacting from? Price is reacting from this level, support level. Right, so these are just internal structures. Why? They are forming within a candle range. So it broke out here, so automatically this also becomes a level. Do you understand? This becomes a level. So this is exactly how you can start improving your trading using this simple smart money concept in line with support and resistance. I tell you, if you can, try as much as you can to practice this could actually add up to what you already know. So what I'm saying is this: don't get attached to one particular thing. Don't be too confused about it, right? Have an understanding and you are good to go. All right, so thank you for joining in. I hope, in case you really want to learn more, I recommend that you check and watch. In case you want to learn more about support and resistance, how I trade it personally, I recommend that you watch this video, or check the second link in the video description. And have a nice day. See you on the next one.